IFRS 8 covers segmental reporting. It's a really important accounting standard, even though it doesn't actually explain how to account for anything in terms of double entries. It's all about what firms need to disclose in their accounts. And what this means is publicly listed entities have to disclose the major segments of their business. Now, a segment is just a part of the business that earns revenue and incurs expenses. And anything that makes up more than 10% of either the revenue or the profits or the assets of the business has to be disclosed. And that gives users really important information about the results of different parts of the business rather than just the business as a whole. Now, a firm needs to explain the profit that that segment has generated, the assets from that segment, the liabilities of that segment, and then anything else that is looked at by the chief operating decision maker, which is often really revenue as well. Now, firms don't really like that as much because obviously that's giving away the performance of individual parts of the business, which they may prefer to keep sensitive. But it does give the users really useful information. So someone like Apple will split their business into iPhones, they'll split it into services, to wearables and home accessories, Macs and iPads. And when we look at that, we can see that actually the iPhone still makes up around 50% of Apple's overall sales. But it also shows us that the services element, where you look at the iCloud, where you're looking at Apple Pay, where you're looking at the App Store, that is the second most significant part of the business, where people might have thought it may be the Mac or the iPads, which are actually the fourth or fifth part in terms of the size. So users can really drill into what is the key of this business, what are the key drivers of success. Now, firms can actually select what they think of as a segment, and that gives us a bit of a problem because they could say, like ASOS, the online fashion company, they could say we have one segment, and that is to sell clothes online. So the only segmental reporting they do is geographical, so UK sales, EU sales, US sales, and so on. And we see that problem with companies like Disney, who previously split out their TV studios, their movie studios, their streaming from Disney Plus, and then their parks. Whereas now, instead of splitting it like that, they just split it into Disney Media, which covers the TV, the movies, the streaming, and then Disney Parks. So actually really combining some segments and actually giving us a little bit less useful information. So IFRS 8 really does help us, it really helps us analyse the business, but companies may look for ways to just kind of minimise the segments that they have and combine them, which they're allowed to do if they believe they have similar characteristics.